It is now time to familiarize ourselves with compilation engagements. Let's get familiar here. This section applies when the accountant is engaged to perform a compilation of financial statements, prospective financial information, pro forma financial information, or other historical financial information. Understanding in which case we're going to do this, right? Again, we'll see a nice breakdown with a lot of charts, what we're looking at here. Because a compilation engagement is not an insurance engagement, a compilation engagement does not require the accountant to verify the accuracy or completeness of the information provided by management, or otherwise gather evidence to express an opinion or a conclusion on the financial statements. Remembering back to how preparations and compilations are similar, but remembering those differences as well. The objective of the accountant in this engagement is to apply accounting and financial reporting expertise to assist management in the presentation of financial statements and report in accordance with this section without undertaking to obtain any assurance that there are no material modifications. So we're just helping management out, but we are not providing any level of assurance. It's really going to come up to just how good of a financial statement preparer are we. Really going to be the result of this engagement, right? If management's going to be happy with what happens, it's up to us to use our expertise and knowledge, prepare accurate financial statements, and we're just going to have to take at face value what they give us. Obviously, in any engagement, have a nice questioning mind, think about things. Does this really make sense? The accountant must determine whether the accountant is independent of the entity. However, you don't actually need to be independent. You simply have to put your independent status at the end of the report. So that's important to note there. We do not need to be independent. However, we need to determine if we are. And if we, regardless of if we are or are not, we need to list that out. Why is that? Just different rules for different engagements. Maybe one day I'll go sit down with the CPA, talk it through. Why is that? Why is that the case? Well, it's just a higher level of engagement, but I'd love to hear their thoughts on the matter. All right, next up, establishing an understanding for compilation engagements. The accountant should establish an understanding with management, as we mentioned for our other engagement types as well. The whole purpose of this is to reduce the risks that anyone misinterprets the needs or expectations. So, for example, if it reduces the risk that management may inappropriately rely on the accountant to protect the entity against certain risks, essentially saying maybe management thinks you're actually going to really do a lot of due diligence and make sure the financial statements are accurate, but if we come to an understanding about what's required of each party before time, then we won't have those issues. The accountant should ensure that the responsibilities, the understanding of those includes the objectives of the engagement, management's responsibilities, the accountant's responsibilities, and the limitations of the engagement, right? This is a severely limited engagement as compared to, let's say, an audit. In some cases, the accountant may establish such understanding with those charged with governance. Let's see what we want to talk about here. The AICPA has to say about compilation engagements. Well, in understanding with management and, if applicable, those charged with governance regarding a compilation of financial statements should include the following matters. Well, we should include the objective is to assist management. That's one of the bigger differences here between preparations and compilations, right? We're assisting management. The accountant is going to utilize information that is the representation of management, the owners of the financial statements, without undertaking to obtain any level of assurance. Management is responsible for the preparation and fair presentation of them. Management is responsible for designing, implementing, and maintaining internal control. Management's responsible for fraud and compliance with laws and regulations. Management is responsible for making all financial records and information available to the accountant. And lastly, the accountant is responsible for conducting the engagement in accordance with SARS. There we see, important point, memorize, compilation engagements fall under SARS. Continuing on here, this understanding should include the understanding that a compilation differs significantly from a review or an audit of financial statements. A compilation does not contemplate performing inquiry, analytical procedures. So you see the common denominator, the common trend here is to compare the engagement you're doing to the next level, the next highest level of work, and basically say, hey, we're not doing that. We're doing this lower level to make sure there is absolutely no misunderstanding. Compilation doesn't include any of these things done in a review. Additionally, a compilation does not contemplate obtaining an understanding of the entity's internal control, assessing fraud risk, testing accounting records, or doing any of these actions. Accordingly, we won't have an opinion here or have any level of assurance, right? Reviews have limited assurance, but here in compilations, we see there is no level of assurance at all. The engagement cannot be relied upon to disclose errors, fraud, or illegal acts. That's important to note as well. The accountant will also inform the appropriate level of management of any material errors and of any evidence of information that comes to the accountant's attention during their procedures that fraud or an illegal act may have occurred. So they're not looking for it. They're essentially just saying if you find anything just by going through your normal compilation procedures, they'll make it known. The accountant need not report any matters regarding illegal acts that may have occurred that are clearly inconsequential and may reach an agreement in advance with the entity on the nature of any such matters to be communicated. Lastly, here, the effect of any independence impairments on the expected form of the accountant's compilation report, if applicable. Like I said, you could have independence impairments, but make sure they're known, make sure they're disclosed, and make sure you communicate that with management and possibly those charged with governance. Let's talk about compilation engagements for special purpose frameworks. Well, the accountant's compilation report on financial statements that are prepared in accordance with a special purpose framework should include a separate paragraph. Now, what is a special purpose framework? This could be doing IFRS financial statements or cash basis financial statements, anything that is not your normal GAAP accrual based financial statements. You're going to need to have a separate paragraph that that indicates that the financial statements are prepared in accordance with whatever that framework is. You're going to have in that paragraph a reference to the note to the financial statements that describes the framework, if applicable. Lastly, that this special purpose framework is a basis of accounting other than GAAP, making it clear to the readers of the financial statements what is going on. A couple more points about compilation engagements. We are diving into these, having a good time exploring them. Well, an accountant asked to compile financial statements for a company in an industry with which the accountant is not familiar should still accept the engagement, and this applies to, I'd say, pretty much all engagements. We're going to see this in auditing as well, and obtain an adequate level of knowledge about the industry in preparation for the engagement. Just to reiterate that, doesn't matter the type of engagement, as long as you have the ability to obtain adequate level of knowledge, or you can hire a specialist, we'll see that as well. As long as you can do that, you're fine. Now, if you have to start the engagement in 2 weeks and there's no way you can learn about the industry and prepare for it in time, then you probably shouldn't accept it. And it's kind of up to you using your professional judgment and understanding whether or not you should accept it. That's where it does come into a little bit of personal responsibility. More specifically for the client, regardless of the accountant's level of knowledge, the accountant should obtain a general understanding of the client's transaction types. Do they deal in inventory? Do they deal in simply services? Or is it real estate based? Understanding what kind of accounts you're going to see. And this helps you as you're auditing, right? Because you want to understand what you expect to see. You want to have some ideas before you even go in. So if you've never worked on a real estate client, right? Like, what are you going to see there? Real estate income, rental income. If you're working for a service-based company, you're going to see amortization of intangibles. You're not going to see inventory. So understanding the types of accounts you're going to see for the types of financial statements you're going to get involved with, that's critically important to understand before you get into the engagement. The frequency of transactions, other knowledge. You could have a high frequency trading firm, hedge funds. They might have a lot of activity there, whereas private equity firms may have a couple transactions a year. Just depends on the type of entity. The following procedures are conducted for a compilation engagement, where you're going to read the financial statements to consider whether they are free of obvious mistakes in the application of accounting principles. Boom, awesome, love it there. Remember that an accountant performing a compilation is not required to make inquiries nor corroborate client information. Memorize these, all important points. Lastly, remember that no assurance is given in a compilation, and as such, the accountant is not required to perform procedures designed to detect material misstatements due to fraud or noncompliance. Another name for these procedures, give you a second to think about it. Going once, twice. Substantive procedures, also known as going once, going twice. Tests of details. Awesome, awesome. Moving along here at good pace. Let's talk about the reports that you're going to see with those compilation engagements. Financial statements that have been compiled should be accompanied by a report that states that the statements have not been audited or reviewed. You want to make it clear, no matter what type of engagement, that you did not do the higher tiers of engagement, the more extensive, exhaustive engagement types. Also, that the accountant does not express an opinion nor any level of assurance. Important point. The accountant was not required to perform any procedures to verify the accuracy or completeness of the information provided by management. Covering your butt there. That management is responsible for the statements. Sounds good. The accountant's lack of independence, if there is a lack, like as we mentioned before, independence is not required, but you got to mention your independent status. That the projection's usefulness has limits if the compilation was for projected financial statements for forecasting next year. That has a limit to its usefulness because, guess what? those numbers probably aren't going to come out to be true. Awesome. Lastly, the basis of accounting used by the financial statements if it is not disclosed in the financial statements. Even if it is just normal GAAP, you're going to want to mention, hey, it was GAAP. When the accountant has performed a compilation engagement with respect to both financial statements and the supplementary information, the accountant should include a separate paragraph in the accountant's compilation report on the financial statements or issue a separate report on the supplementary information. That is anything in addition to the financial statements. Now, let's think about what that could be. Supplementary information, it could be an industry report, right? Maybe the client is issuing financial statements, and then just to compare how they're doing, they're giving a report on the overall industry and how well competitors are doing. That's considered supplementary information. And as such, you as the auditor, you can take these options. You can include a separate paragraph about that information or issue a separate report. And if you do that separate report, you want to state that the supplementary information is presented for the purposes of additional analysis, and it's not required as the part of a basic financial statement package. And industry analysis is not required, but it can be very useful, very helpful. It can make the financial statements look good. So that's something management might want to do. That the supplementary information, just like the financial statements, is the responsibility of management. Next, the supplementary information was subject to the compilation engagement. Well, that makes sense because you're reporting about it, and then you obviously were part of compiling it. And then the accountant has not audited or reviewed the information and does not express an opinion, conclusion, nor provide any assurance at all. Shutting down that level of responsibility. We are not taking credit for that. That is managed. Standard compilation reports imply that substantially all disclosures required by GAAP are included in the statements while not stating it directly. That's important to know because you're not going to state. You could have a sim where it asks you what is directly stated in the report, and we've obviously seen a few points for each engagement type, but also what is implicitly stated, meaning which is kind of alluded to, which is not actually explicitly stated. What are we hinting at? If the compiled financial statements include supplemental information, the accountant's separate report on the supplemental information should include a statement that the information has been compiled from information that is the representation of management without audit or review. Catching everything here, making sure we're seeing all these points. And lastly, the compilation report date should be the date that the compilation was completed. We'll see a lot more criteria about audit report dates, but this is what you need to know for compilation report dates. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.